Peace and love, everybody. This is Young Nas from iGotOptions LLC, and in this video, I want to talk about what the two market forces are. Alright, now I've expressed this and explained this in a previous video. However, I want to go into more depth about it. Alright, now the two market forces are supply and demand. And what I mean by that is they're the two things that affect whether a stock price goes up and goes down. Alright, now this may sound like common sense, especially if you're an experienced trader, but stick with me though, because there's something I want to express. Alright, so with supply and demand, it's basically, people buying and selling. If people are sending in orders to buy shares of Apple, what's that going to do to Apple's stock price? Raise it up higher, and vice versa. If people want to sell their shares of that stock, it's going to go down. Now, there are specific reasons as to why people would buy and sell stocks, because of fundamental or financial issues, or because of some technical chart pattern they see, but that's really the gist of it. Now, with that being said, although this sounds like common sense to a lot of traders, there's something I want you to take into consideration. There's hundreds, if not thousands, of stocks on the stock market. We understand that people buying and selling is the only way for a stock to go up or a stock to go down. Now, with that being said, from a retail trader's perspective, institutional traders are the people that essentially drive up these stock prices and drive down these stock prices. Alright, retail traders don't have that financial power. Then that raises the question, how exactly do these institutional traders operate? Right? How do they put their money into these stocks? And the reason I'm saying all this is because I'm trying to get you to understand how much of a significant role institutions and hedge funds and banks and different trading corporations play in these financial markets. Alright? Because just think about it. The stock market's open for about 8 hours a day. Alright? And for those 8 hours, there's multiple stocks going up and down every single minute. So if you just take a step back and think, are these people literally just looking at a stock 24/7 and trading it constantly non-stop? Or is it some sort of automatic system that's just pumping money in and out of these different stocks? Alright, now I'm still doing research on this, but this is just something to think about. Alright, so with that being said, these are what the two market forces are.